to start with Asian session update from Edmund in Singapore.
Thank you, Akmal. So the major story this morning was, of course, the Italian referendum, where the PM lost his bid for Senate reform. Nearly 60% of the voters casting their ballots as no in a high turnout referendum. Immediately following that, we saw Eurodollar drop to a low of about 105.04, while Asia equities were in the red as news of the referendum sparked fears of an eventual Italian exit from the European Union. Safe haven flows also saw the dollar-yen decline to 112.87, giving traders a reason to sell the Nikkei, which had rallied to 11-month highs late last week. As a whole, the market reaction was more of a muted response compared to Brexit, as the Italian no vote was largely anticipated by markets. In New Zealand, we saw the Kiwi fall as much as 70 pips to 70.70 after a surprise decision by PM John Key to end his tenure after 8 years in government. The PM had said that he had wanted to spend more time with his family. And in crude oil, it was lower by about 1% today, as a higher US rig count unsettled the oil bulls despite the OPEC production cuts that we heard of last week. So Baker Hughes showed on Friday that the US oil rig count continued its rally, up by 3 rigs to a total of 477. And lastly, in China, we had Tyson Services PMI coming in better than expected, and this lended support to the Aussie dollar, which continued its 3-day rally ahead of the RBA meeting, which is going to take place tomorrow. And with that, let me hand it over to John Hardy. Thank you.
Thanks, Edmund. Good morning, everyone. Here's our key events. We'll look at the key events ahead this week, today, this week, and the longer-term event risks. We have an added one here for this week's highlights. On Thursday, the RBNZ's Wheeler is scheduled to deliver a major speech. Now, this is not on the calendar before. And this is a new announcement, so maybe talking tough on housing, who knows, perhaps hawkish risks there. Just be aware of that one, as well as Australian RBI overnight, and ECB is most likely the most anticipated meeting this week, with the message, according to the Reuters story recently leaking, that the idea is they may look to extend the QE asset purchase program in the near term, sort of indicate that, especially over the Italian situation, that they're going to remain on top of spreads and any disorderliness in the market, but that they will also sort of be looking far forward, talking about a taper, and that is that mix of dovish and hawkishness may confuse the market or keep us from trading to new lows. I'm not sure. Of course, we still like the trend lower, but it's I think it's a bit dicey this week trying to figure out the near-term moves for Eurodollar. Today, the most interesting event risk is the ISM non-manufacturing survey. And the Fed's Dudley may be saying something as well. He's the New York Fed chief, so he's an important voice to hear from the Fed. With the Italian results, it was more the degree of the no rather than the no that is a surprise. Nearly 3-2, the margin for the no victory. Renzi did resign, but it looks like some kind of the near-term uncertainty is a bit hard to sort of trade on, because we may get a caretaker government, and this means the elections aren't going to be up until 2018, so that doesn't mean we're necessarily going to get any further interest in trading this. We'll have to watch the Italian bank situation, how capable the ECB is sitting on the BTP market to keep sovereign spreads in Italy orderly. So far, we just saw it gapping up to sort of the middle of the recent range over the last few weeks, so nothing drama, no huge drama yet from this, besides the immediate moves in the market. I do note, everyone, please keep an eye on this, especially China's response. There's very controversial conversation President-elect Trump had with Taiwan's president. First time the heads of state in the U.S. and Taiwan have spoken since the late 70s, and some very critical China comments from Trump over the weekend. This is pretty heady stuff, if you ask me. The two superpowers economically and sort of aggressive comments. Now, in terms of the Italian referendum, one of the most pure sort of expression of the euro weakness or strength is likely in euro sterling, and we're getting towards some key areas here. Basically, the post-Brexit support levels and the 200-day moving average. You can see the high pre-Brexit vote was 81.15. So let's see if we can't pull something together here, then we're maybe talking about some more profound downside for that pair again, ongoing uncertainty. What happens next in the eurozone? With that, I will pass it along. Thanks.
Thank you, John. So yeah, it was a pretty clear no victory in Italy, and Renzi is gone. I think the broader question longer term is whether this is point of no return for Italy. I mean, Italy is probably one of the countries that have done the least number of reforms together with France since the financial crisis broke out. And look where Portugal and Spain is in terms of economic momentum compared to Italy. It's staggering, and it just shows you that you need to make reforms when you have a crisis, and that's when you have the mandate to do it. And Italy is failing miserably in this regard, and I'm really worried about Italy. You still have one of the largest debt loads in Europe. It has very low economic growth. Its productivity growth is lower than interest rate cost, and there's so many indicators that are telling you that Italy is on a very, very ugly trajectory. Could become disastrous long term. In the short term, the market reaction has been pretty mild. No major moves, at least compared to what we've seen before, on key event risk. The major issue at hand is the 286 billion euros of bad debt across the Italian banking sector. That problem has not gone away. Actually, to the contrary, it might be even worse now, because we have Banca Monte dei Paschi and Unicredit both going to raise capital over the coming 2 weeks. And Monte dei Paschi is really the one that is most in need. And I wonder how the market will interpret the result, and whether they want to lend a lot of money to provide a lot of equity to the Paschi. So we'll have to see about that. I think this no victory is really not going to be the catalyst for European equities and financials that I thought to be. I really think you should be very hesitant here. So let's see how the capital raises go, and if they go according to plan, then we can talk about buying European financials again. But for the time being, I think they're going to be weak because of the uncertainty. So I don't think this is going to be a massive Brexit trade replay as we have seen before. I think the dynamics are completely different here. So I just want to say that I'm cautious here, and I really want to wait for Monte dei Paschi to raise capital, and then we can begin talking seriously about what to do in Europe in terms of trading in the cyclicals and financials. And I'll end it here. Thank you very much.
Thank you, Peter. So just carry on the Renzi theme. We did see a bit of a boost in gold overnight. It proved to be short-lived as the market settled back down again. Against the euro, however, it does remain a little bit higher. So again, it just highlights that the gold at the moment may not be a gold against the dollar story, but maybe against other currencies, some like the euro and the yen. But again, the limited reaction so far. Again, probably primarily because it was priced in it already before the weekend. So but we see the positioning continue to be scaled back. We're seeing this continued rotation out of precious metals into industrial metals, and I can just show you these two graphs here, which gives you an idea about it. If you look at copper last week, we saw another week of strong buying. So we are well into record territory there. So just still one to keep an eye on. But once again, overnight, we've seen the Chinese buying up in there, buying the commodities higher. So that is really where the push, the pull is coming from at the moment. And in gold, it's a complete different story. We're seeing ETF holdings being reduced on a continuous basis, and we're seeing the net long in the futures market having been cut back to levels last seen back in February. So that's that's clearly removing some of the overhang of supply in the market. Some of the longs that needed to be reduced. So we're still back in the battle of this. The battle for 1172 is really what it is at the moment. The 61.8% retracement, it's being mentioned by several these days as the key level, and it is indeed. If we do break below in earnest, then it clearly is signaling a prolonged period of consolidation. So holding above for now, but we really need to see it back above 1200 in order for this market to stabilize, and we start to see some of the flows out of ETFs start to slow down. Oil was obviously the very, very big story last week. Phenomenal rally. We back up to the highs from seen earlier this year. Brent even just had a peak through. But I think the main driver initially is the need for markets to adjust. We have seen before how short covering can drive these markets well above levels which is potentially justified. I think we're seeing a little bit of that happening once again. So once the market adjustments have taken place, the market will switch its focus to compliance, and AIMI, the the old oil minister from Saudi Arabia in his in an interview over the weekend said, well, we tend to cheat. So that was a nice little salute to his old colleagues. So that will be a focus. But they meet on Wednesday, on Saturday, together with non-OPEC members to hammer out the production cut details, and that will obviously be we'll have some focus on that. And just finally on the oil market, what you have to be aware of when the contango drops, i.e. when the spot price starts to move relatively higher up than the rest of the curve, then the contango starts to diminish. And one of the big the sources of demand in recent months has been the storage trades, where you buy cheap oil and you put it on a tanker or on tankers or in storage facilities. With the contango now coming down, these storage places will start to be unprofitable, and they will be abandoned, and that basically means we'll see supply hit the market over the coming months, potentially before the production cuts start to have an impact. So that's an additional source of supply you just have to be aware of over the coming months. And on that, I'll leave it to Michael. Have a good one.
Right, thank you, Ole. A very muted reaction in fixed income markets as well, to say the least. We actually have Bund futures trading lower for the session right now. So it looks like we were right to suggest that a no vote was largely reflected in prices before the weekend. The Bund future at 160.60 at the moment. It closed on Friday at 161, so that's 40 bips lower for the future. In yield terms, it's trading back above 30 basis points. And if we look at BTB and Italian government bonds on the opening, the spread between Italy and Germany widened by 18 basis points. But at the moment, it's only 7 basis points wider, and we have Italian 10-year yield below 2%. So it's actually now lower than just 1 week ago or 2 weeks ago, and it was trading above 2.1% for the 10-year yield. As Peter already said, I agree with him. Subordinated, or the financial space in Europe, obviously the one sector to watch. Subordinated financials in the credit market. Some of the European names, such as Deutsche Bank or RBS, could see some weakness here in early trading. Otherwise, in Italy, if there's one particular bond that I'm looking at, and it's the same name that Peter mentioned, the Monte Paschi bond. This is the 2020 subordinated Monte Paschi bond. Indicates that it could open below the 60 level, which would be a yield of approximately 25%. But at this point, it's probably not being priced in terms of yield anymore, more in terms of survival chance or the restructure risk, more accurately. So this could be an indicator for the market's confidence in the Italian banking sector, and potentially a much wider impact for European financials as well. Otherwise, this week we'll be looking forward to the ECB, what they have to say about this, and specifically also the future of QE on Thursday, but there'll be plenty of time to discuss that in the days ahead. For now, I will end our morning session this morning here on behalf of the Saxo Strategy team. Thank you for tuning into the morning call this morning.